Today's question from the comments comes from Jonathan. Jonathan says, my boss just offered me a promotion, but I'm terrified to take it. My salary would go from 98,000 to 120,000. My coworker, who thinks he's a financial genius, says if I take the promotion, I'll actually bring home less money than I do right now because my income will be taxed higher. Is he right? Should I turn down the raise to protect my take home? Listen, Jonathan, do not listen to your coworker. This is a very popular misconception about the way taxes actually work, and you definitely would not be the first one to turn down a promotion because you think the tax brackets work like a trap door. Like once you cross a certain point, the IRS grabs everything at a higher rate. If you look at the chart on your screen, I'm going to show you exactly how this really works. This is the 2026 tax bracket ladder. Think of your income like walking up these stairs. You don't pay the top rate on everything, you pay it in layers. Look at the bottom step. The first 12,400 you earn, that's safe. The IRS only touches 10% of that money. No matter how rich you get, that first chunk is always taxed at 10%. Now, as you earn more, you step up the ladder. Your income between 12,400 and 50,400 goes into the 12% bucket. This is a key distinction that you really got to understand. All the income below 12,400 is still at 10%. Only the income between 12,400 and 50,400 gets taxed at 12%. Next up, income from 50,000 to roughly 105,000 goes into the 22% bucket. Here's the key. When you step up to a new stair, the IRS does not look back down the staircase and raise the rates on the money you've already earned. That money is locked in at the previous rate. Now, let's look at your question. You're worried about taking a raise to a $120,000 salary. Look at this box right here. This shows exactly what happens to a single filer making $120K. Your first $12,400 is still taxed at 10%. Over $12K and under 50 is still taxed at 12%. Over 50 up to 105 is still taxed at 22%. Only the money above $105,700 is taxed at 24%. So only the last dollars earned are taxed at the higher rate. That raise isn't a penalty. It's just a new layer. So the bottom line, the myth is that if I earn more, I'll take home less. But the reality is earning more never reduces your take home pay. For you guys watching at home, if you're having a taxing question that you want answered by a real tax pro, just drop a question in the comments, or you can send me a DM. For Jonathan, take the raise, take the promotion, and if your brother-in-law tries to give you tax advice again, send him to this video. Or better yet, tell him to call Legacy Tax, and we'll set him straight.